I met Carmen at the BLN event a couple of weeks ago, maybe about a month ago, and she is expert on financing and budgeting. So I wanted to get her on to share with us her masterful information on financing and budgeting. How you doing, Carmen?
I am doing good. Do I have my title up there? Did I enter the studio right? I can't see.
Yes. Yeah.
Yes,
Yep.
you are in.
Does it say benefits to go LLC?
Let me. Yes.
All right.
Yeah.
There you go.
All right. So we're going to let you take it away and have fun.
All right. Well, listen, first of all, I just wanted to say thank you because I just had the pleasure of meeting Casper at a networking, kind of like a business mastermind in DC, which is one of my favorite cities. I am located in St. Louis, Missouri, but I have offices in Maryland and in Chicago and in Kansas City. So it was just such a pleasure to sit down with him. We sat at the same table and we connected. And the only person that I regret that I didn't get a chance to meet was his beautiful wife that he just kept talking about all the time and saying how, how he can't wait for me to meet Cheryl and how we would kick it off. So how you doing, Miss Cheryl? I can't wait to share some information with you guys. So really quick, because I've only got 20 minutes. I'm looking at my phone right now. Again, my name is Carmen Hornberger, and the name of my company is Benefits to Go LLC. A little bit about me, right, in 30 seconds. I've been pretty much in the money business all my life. Did some work about 13 years for a financial services company here in St. Louis, and did another 6 years at an online brokerage firm in Scottsdale, Arizona. I moved back home to St. Louis in 2008, maybe about 2012, and I've been here ever since. I started my company because I saw that there was a huge financial need for not only women, but for business owners to understand their retirement by way of taxes and by way of investing, right? So I just want to get on here and I want to talk about different ways that we all can invest in our retirement and still keep away and still eliminate market losses and taxation. So let me get into it, because what I teach individuals how to do is how to index. So let's get right on into it. I'm getting ready to share my screen. This is getting ready to be quick. Yeah. Sorry for the technical difficulties, everybody. Again, I was on my iPad. I'm not the best with technology, but I promise you, I'm gonna take a class in it as soon as I get off this summit. Again, my name is Carmen Hornberger, and the only thing that I want to do in the next 10 minutes is just let everybody know, right? If you do not want to invest in a qualified plan, meaning a 401k IRA, I'm going to list all these qualified plans in a minute so you guys can take a picture of these plans on your phone. You do not want to continue to invest in these plans if you don't have to. There's another option to invest in your retirement instead of 401ks, Roth IRAs, and other such accounts. What is my mission for Benefits to Go? My mission is to help 25,000 individuals in the next 5 years create passive tax-free income, because I want to be able to educate the masses on non-taxable assets. Guys, the 1% do not invest in qualified plans. They do not give up 35 or 25 or 40% of their wealth only to give the IRS access to their money by way of taxes. They just don't do it. So my job is to hire and educate and train other agents, right? So that I can open up new outlets, so that so that people can know more about indexing. So this is what we're going to talk about today, right? We're going to talk about another way to invest in a 401 outside of a 401k and an IRA, so everybody can have an option to retire tax-free. I don't know how the color is on this particular screen, but this is some facts about women. Since I help a lot of women, I just downloaded some facts from the wiserwomen.org. And this is just some pertinent facts about women in retirement. I'm not going to read all of them for sake of time, but what I'm trying to solve for is number 7. My mother, my aunt, several women in my family who made 6-figure incomes that had absolutely no business on being dependent upon any other government type of program were still dependent upon Social Security. As a matter of fact, African American women and Latino women, by the time they're 65 years old plus, over the age of 65, they are financially dependent upon Social Security, so much to the point to where it uplifts us about $9 million out of poverty annually. That's absolutely ridiculous, especially when 46% of these women and individuals are educated before retirement. So what's the who, what, and the why, right? So the who is just a little background information on the 401k, because trust me, it's not just me, it's a lot of people on here that think that the 401k has been around for 100 years. It has not. The 401k was just created in the early 80s, and it was only created so that rich CEOs could shelter the majority of their wealth. But what happened is, after they realized, right, that they really weren't saving any money at all, they pushed all this taxation on the middle class, and they made us pay our taxes to them later, which is why I'm going to get into the 3 ways in which we save our money, which is what the federal government is doing to us by getting everybody on the line to defer our taxes, right? So what is the what? I wanted to give some information because this is one key that a lot of people just don't know about their retirement and their retirement plans. If a woman or any individual saves $500 a month in a qualified plan for 30 years, that's approximately a little bit over $262,000 that she's contributed in her retirement. If she retires at 65, do you guys know she still owes the IRS a little bit over $100,000 in taxes, and the fees in this account is enough to send 2 children to college? It's going to be over $191,000 in transactional fees and administration fees that your 401k is charging you behind the scene. This is everything that I learned in corporate America. Another thing about these qualified plans is the taxation. I don't know if my slide number is over the taxation, if you guys can see it all, but the taxation breakdown on all of these qualified plans that I'm about to share is up to 36% on all withdrawals across the board. We already know about the additional 10% penalty, right, if we need or want access to our own money before the age of 59 and a half. But there's this RMD penalty that a lot of my clients over the age of 59, they have no idea what a required minimum distribution is. What a required minimum distribution is that the IRS says by the time you reach 73 in the state of Missouri, if you have not pulled out 10% of your total overall qualified account balances, not only are they going to tax you on the penalty, right? Well, not on the penalty. They're going to tax you on the withdrawal, right? Because you've been deferring for so long. So you've got you've got the deferral withdrawal tax of anywhere between 20 to 36%, and then you've got the penalty added to that. So that's another 10%. So that's how we're getting up to 46% in taxes. Absolutely ridiculous. So this is why the majority, unfortunately, of all of my clients look like this if they have already entered into retirement. So everyone on the line, I help 2 sets of people that have another 10 years to retire, because I can help them not invest in these type of plans, or people that have already retired and now they're just trying to produce passive income from their retirement, and then I help give them living benefits and long-term care, all wrapped up into the same strategy. But we can talk about that later. But this is what happens to the majority of Americans, right, that put all of their eggs in one basket. So the majority of my clients over the age of 60, they feel betrayed. They've lost hundreds of thousands of dollars in their retirement. And the majority of my clients that I had in corporate America still cannot retire in the spring of 2026 because they've lost over 37% of their accounts. And this is what the federal government knows, everyone. This is what they know. Okay. So what if we really knew, right? What if we really knew that if we started with 5,000 or 10,000 and regrew this thing, and we grew our retirement right to 1 million, we still would owe anywhere between $350,000 to $400,000 in taxes. I tell my clients, all this is just surplus. This is just profits, which is just a gift that we're just pumping back into the federal government's hands, right? For them to pay their rich CEOs more salaries and bonuses. These are the plans. Casper, I don't know if we can see pension plans at the bottom. Here, let me. I don't. I'm too afraid to even touch anything on the screen. Okay, but the accounts that are affected, the qualified plans, ladies and gentlemen, are all 401ks, right, and IRAs. It doesn't matter how they slice it. None of them are good. 403bs. Why do I have voluntary and involuntary? These are for your teachers. Teachers are taxed twice, guys. They get you voluntarily, which is the 403b plan, right? And then they get you involuntarily because teachers don't pay in teachers do not pay into Social Security. So they get you by involuntarily, right? Without your permission. They withhold anywhere between 3.5% to 5%, depending upon your state. They withhold that. And then that's how the teachers get paid their pension, or AKA their defined benefit plan. So there's two ways that teachers are taxed. 557 plans. You would not, guys. You Casper, you wouldn't have any idea how many military people and clients that I have that are being affected by what's going on right now in the presidency. But right now, these 457 plans, AKA TSPs, they're all taxable. They all work the same way, ladies and gentlemen. 529 plans. Do not continue to put your money in these plans. These plans are also government owned. They're taxable. And I don't have time to go through all of the rules regarding the 529 plans, but they are controlled. If your children do not go to 4-year accredited colleges, and if you don't use the expenses towards, college fees and, whatever expenses that they say, you could be subject to taxation as well. I'm not really going to read into this because I'm getting kind of low on my time, but this is just some information. If anybody wants to book an appointment with me, I can, I'm not an economist, right? But I've been doing this for a very long time. I'm in my 50s, and I can tell you in 1971, Nixon screwed it all up for us. Okay. So if you want to book an appointment with me, I can tell you what happened. And we got, so right now our US dollar is nothing but a currency, right? I just got back from Brazil. If you go over to Brazil, their currency is called reais. If you go over there with $1 American, you can get 5 reais. Okay, so this whole U.S. dollar and currency exchange and making our U.S. dollar nothing more than a currency that floats is not a good deal for all of us. That's the reason why the U.S. economy is in the shape that it is right now. Our FIN number. This is what I help people figure out, because people that come to me say, Carmen, I know that I want to retire. I just don't know how much money I need. So I help them figure out their FIN number. The average age of my current clientele is 47 years old. So let's just make this math simple, right? Because because what's going on right now is people are unfortunately living longer in retirement. I don't know, fortunately, unfortunately, I guess it's good to live long, but if your money runs out, it's not, right? So if you're making $100,000 right now, right, and you want to have the same standard of living, and if you think that you're going to live 30 years in retirement and die at around 90 or 95, you probably are going to need an extra $3 million in retirement. I help people cut that down with at least 20% of that, right, in my program. So, and that's because I help them understand Rule 72. So many people are investing their money, but they're just invested in it. They are investing it in nonsense. Sorry for the sake of words, but they're not investing it by truly figuring out how long it's going to take for their money to double. So what I do is I teach my clients, and not only do I put them in vehicles that are going to keep them away from taxation and market losses, but I also help their money double, because I've got clients that are 8 to 12 years behind on retirement. So my products help you get caught up in retirement quickly. What is this? This is this is pretty much saying, you know, right? I mean, I know I went through a lot of fear factors here, but indexing is the key. If all of us had a tax-free retirement account, it would not only eliminate taxes and generate income and revenue for us, but it would generate income up to 40 to 60% more than any IRA account could. This is kind of the kind of like a because I think I'm out of town out of time here, but this is kind of like a comparison slide, which kind of gives you a side-by-side comparison between my index product and an IRA. So again, the you know, just for sake of time, the only real difference is I'm keeping all of my clients away from market risk and taxation for the long-term play of retirement, right? Because the IRA is only going to give you what, limited contributions. It's going to obviously give you penalties and taxations on early withdrawal, and all of your money is subject to market volatility. I remove all of that. Another thing that I help my clients understand is the 3 ways that people are saving money. Guys, there's only 3 ways that you can save money, ladies and gentlemen, short-term or long-term, which is tax deferred, before taxes, or tax-free. For sake of time, I help all of my clients get some money in this quadrant up here, the tax advantage quadrant. Ladies and gentlemen, if we don't start generating tax-free passive income right now before we enter retirement, our money is going to run out. I also help my clients create what's called living benefits, because a lot of them, as I said, are over 40 and they cannot afford a $2,300 a month good long-term care policy, right? And they don't want their children to be managing their medical expenses. So what I do is I help them create living benefits inside of their index plan. Can't get into that right now, but if you want to, you know, learn more about it, obviously you can book an appointment with me. This right here, I don't know if you can, let me see, go here now. This right here, I don't know if you can see it, but this is a side-by-side comparison of a 401k on the left and my indexing plan on the right. The only thing that I want for you guys to understand right now, for sake of time, is that the woman on the left, which is my client, she started with 394,000. This woman over here is her sister. She started with 580,000 when she began to contribute in her 401k. Her sister over here to the left that had to the right that had my plan, at the age of 66, when she was done contributing for her retirement, she had 971,000. So she still had about 81,000, a little bit over $80,000 less than her sister, which ended her retirement at a little bit over $1,052,000. This woman over here only received $41,000 for 29 years in retirement. This woman over here, my client, received $96,000 a year for 29 years in retirement. This number right here that's in the rectangle is the total of the amount of contribution years that they received in their retirement. This lady, 96,000 multiplied by 21 years is a little bit over 3.2 million. This lady over here, 41,000 multiplied by 21 years is a little bit over 1.1 million. The key, guys, is why in the world is this woman on the right? How in the world did she produce an extra $54,000 a year in income when she started and she ended with less money? The reason why is because this lady over here to the left in the 401k box, she paid taxes on every single withdrawal on that 41,000. So what's the meaning in all this? The meaning in all this is that if you invest in a retirement account and you're saving anywhere between $400 to $500 a month, and you do that for 29 years, you're giving up $2 million in income to the federal government, which needs to be in your pocket. And that's why I'm so passionate about what it is that I do. I'm going to go through a little bit of this right here. So how can I get this account? You can just get this account by calling this lady who's not real good with technology, but real good, but real good on indexing. Guys, I've been indexing. I'm 54. I'm not ashamed of my age. I left corporate America my son is 17. I left corporate America in 2010. I've been indexing ever since. I pay taxes on the money that I withdrew, Ms. Cheryl, from my 401k, and I've made back 40%, not only over the amount of money that I paid the IRS, but the indexing, right? Because my money is doubling every 5.5 years. So the more money I throw at my index, right, the more money that I have in retirement.
Awesome.
All right. Well, sign me up for my appointment. I'm coming. I want to talk to you, Carmen.
Okay, let's do it. Let's do it.
You got my attention.
Sorry about the technical difficulties. Hopefully I didn't delay everything back so much. God is good. My son was here.
Amen. Amen. Thank you so much. I appreciate you.
Absolutely.